Okay. Right. All right, so where were we? We were on the 25th. 25th. And on the 25th, it says the owner withdrew parts marked 400 Rand, cost price 150, all right, for his own use. Which accounts are affected here? Which accounts are affected? Yes? Trading inventory and drawings, 100%. So what are we debiting? What are we crediting? %. We are crediting trading inventory because our asset is going down. And here we are debiting drawings. And we know that assets is obviously affected, and we know that it's obviously going down, so we're going to make it a negative. But what are we going to make it negative by? 400 or 150? The cost price, which yes is 150. All right, great stuff, guys. Okay, and then drawings affects owner's equity. Once again, negative 150. Okay. That's why we have the account of D Kotsa is overdue by 500 Rand. Debit his account with 8% interest for 3 months. Wow. Which accounts are affected here? Which accounts are affected? I don't know. You said interest income, so we have two proposals, interest income, and we have debtors. Anybody else have some thoughts? Agree, disagree? Nothing, no other suggestions. Okay. All right. Well, both those suggestions are right. Okay. The fact that it's overdue means that he owed us. Okay, so it has to be debtors control. All right. And then obviously we're charging him interest, so that's income for us. Okay. We're not being charged, we are charging it. Okay. So how then do we calculate this interest? Or maybe let's just get this debit and credit out the way. What are we debiting? What are we crediting? We have debtors control and interest income. Those are the two accounts. What? Yes, we're crediting interest income. Okay, and then obviously we're debiting debtors control because it's an asset and it's going up, and we also know dead click. And then now we have to calculate. How do we calculate this 8% interest? That is for 3 months, or for a period of 3 months. What month? Happen? Was that a hand? Yes, you can try. Okay. So first we say 8% times 500, and then what do we do? Okay, 40 Rand. Just 3? Okay. This is 3 months. Okay. So if they said this was the interest per month, we'd be 100%. We'd leave it at that. Okay. We do it exactly as they say. But they didn't say whether this is the monthly interest or not. Okay. But If they don't say, you can assume that it's an annual interest. Okay? So this 3 needs to be 3 months, so it needs to be apportioned over 12. All right? Okay? But otherwise, good. Thank you so much for that. Okay? So then we say 40 times 3 over 12. What do we finally get? Somebody tell me. What do we finally get? What do we finally get, sir? Are you also getting 10? Are these people telling me the truth? Can I trust them? You get 10. Awesome stuff. We have 10. All right. Cool. So, obviously under debtors, or under assets, should I say, we are going to then put plus 10, okay? Then under interest income, under owner's equity, we're going to put plus 10 as well, because we're receiving an income. Everybody together there? Everybody happy? Okay. Received a check from a Swartz for 1,000 on account. Again, here they've put debtor, so that kind of gives you a hint, but you should know that obviously this means that the debtor has paid us. Once you see on account, and it says we received, it didn't say we paid. Okay, we received. Okay, so which accounts are affected? Bank, yes, because we received money, and the other one is? Yes, I think I heard you say. What did you say? Debit control, yes, yes. Okay, right. So what are we debiting? What are we crediting? We debit bank because we are receiving money. Our bank is going up. Okay. This asset is going up. And then we credit what? Debtors control, because it's going down. Debtors control is going down because less people owe us money, or we are owed less. Okay, so yes, just going to be a plus. Sorry. Plus slash minus. How much is this? 1,000. Some stuff. Right. So then the next question that we have to ask ourselves. The next question that we have to ask ourselves is they wanted us to calculate the profit and the loss. What did you guys come up with? What did you guys get as the profit and the loss? Remember, the formula for profit and losses, you can see it on the board, is income minus expenses. All right, that's it. Okay, so we just need to go to each transaction and check where we were receiving an income, we were incurring an expense, and then add that up, deduct where necessary, and then we then should have gotten to an answer. And that answer should have been, should have been 710 profit. Okay, is that what you guys got? Is that what you guys got? Do you guys do this exercise? Oh, we didn't get that part. You weren't sure about certain stuff. Okay. I thought we had done this from the last exercise. That's why I was like, so that means that we should do it together. Okay. Right. So again, the easiest way to do the profit and loss after having done the accounting equation is to simply go to owner's equity, because remember, in owner's equity, that's where we have our income and our expenses, because we know both our income and expenses affect owner's equity. Okay, right. So then we quickly go there and we ask ourselves the question, where did we have a plus or in a minus? Okay, and was that income and expenses? So if we look on the 16th, we see that we had 1,500. All right, and there we sold parts, we sold inventory. So there we need to put in that plus 1,500. Okay, and we also had an expense. So we then need to say negative 1,200. Okay. Then after that, if we look again on the 24th, we sold again. All right. So that was an income of 1,500. So plus 1,700. Okay. Then we also had a cost of sales. All right. And that was for 1,300. Okay. Then on the 27th, what happened? Let's see. Okay, well, before we get there, we go to the 25th. We have a negative 150. Should we include that? Negative 150. Why shouldn't we? What was going on there? It was drawings. And we know that drawings we don't include in our calculation for profit. And remember, it's a proprietary account. It's not an expense. It's not an income. Okay, so it can't be included in the calculation for profit. Okay, so we ignore that. We move on to the 27th. And there what happened? All right, we were charging interest there. Okay, we're charging interest there for 10 rand. Okay, and I didn't record this right. Yeah, I didn't record this right. Remember here we said we received a check. Oh yeah, no, I did record this right. My bad. Yes. All right, so if we add up all that, what do we get? A positive 750. Oh, sorry, 710. Am I right? 710. Okay. Everybody happy? No questions? Oh, cool. All right. Mm-hmm.
Did we add the transaction on the 28th?
No, we didn't. Ask me why. So we sold to him on credit, but can you see that we recorded the sale? So we added the income of 1,700 on owner's equity. So we had already recorded that we received the income. And if you look there, remember, when we're calculating for profit, it's only income and expenses that we're looking at. If we look on the 28th, which accounts were affected? It was bank and debtors control. So it's just assets that was affected. Okay. So does that answer your question? Brilliant question. Cool. Right. So exercise 4 was a lot similar to that of exercise 3. Were there any things that you guys had challenges with there in particular? Because I think I'd actually like us to. Yes?
Number 7.
Number 7. All right, did you guys do it? Honestly, like I'm not even tripping about it. Because if you didn't, then you might as well do it. Okay, you didn't. So. Alright, then we might as well just do it now. Okay. Right. Let's get into this thing. So paid 500 by check to JJ Traders to deliver the trading stock. Okay, so first and foremost, analyze the following transactions by completing the table, calculate the profit or loss for the month and the owner's equity in the business at the end of the month. Okay, cool. All right, so they've already plugged in these balances for us, thankfully. All right, so number one, paid 500 by check for JJ Traders to deliver the trading stock. How do we treat this transaction? Yes. Okay. And the other account? Bank. Okay, so bank, I agree with you. I can jot that down now. What did you want to say? Didn't you raise your hand? Yeah. Okay. All right. So technically you're right. But remember what I told you guys? That trading inventory is not just the actual cost of the stock. It's everything that gets the product to the shelf. So you would actually put that under trading inventory. Does that make sense?
Even though it said we paid for the delivery, not the.
Yeah. It's the same as if we had import tariffs. It would also go to trading inventory. Makes sense. Because also now, remember, when we now also account for selling that, we would then say cost of sales would be inclusive of this. Does that make sense? That's why you see for trading inventory, whenever we sell something, the same amount that we deduct from trading inventory will be the same amount that we also deduct by way of cost of sales in owner's equity. Does it make sense? Okay, because I know exactly what you're wrestling with. You're like, but this is an expense. All right. Okay, cool. So here we go, trading inventory. Not the one. Where's my register, guys? Now I know for sure that I handed it out. I'm not crazy. Somebody has my register.
And you did took it out by
Yeah.
the time I was asking for it. It's not that it was-
No, these are other ones. Let's look at this.
Or is that one?
You guys are not group one, right?
You are group one.
This is the register. So I am crazy, basically. All right. Awesome, guys. All right. So under assets, we are going to just do plus minus. All right. 500. Okay. Then the next transaction is the owner contributed an extra 90,000 cash to the business. All right. We know this is obviously going to affect capital and bank. Okay. What are we debiting? What are we crediting? We're debiting bank. Okay. Because our asset is increasing, and we're crediting capital. All right. All right. And then so under assets, we are going to plus or minus plus 90,000. And under owner's equity, also going to put up 90,000. Okay. Right. Then we go to the transaction on the third. It says cash sales of inventory for 600 Rand. Okay. Cash sales. The moment we see cash, we know bank is affected. So bank is going to increase. So we're going to debit bank. And then we're going to credit what? Sales, we're going to credit sales. Okay. And obviously under assets, we'll have plus 600. Can you guys see clearly? Should I zoom in? I can zoom in. Is that better? Okay, let me do that. Is it fine now? You can't. Okay. Oh, you can see. Okay. All right, no problem. Cool. All right. So then sales, obviously owner's equity, then plus 600. Okay. Cool. And then was everybody added who wasn't a part of the WhatsApp group? Did you guys add yourselves? Add themselves.
Yeah.
Did they? Oh. Have those people added themselves? Yes, no, maybe? Okay, all right, I see. I think it's getting done now. All right, so we'll continue in the meantime. All right, then we know cost of sales and trading inventory is affected. What are we debiting and what are we crediting? Cost of sales, we're debiting, yes, because it's an expense and we just incurred it. And then trading inventory, we're crediting because it's an asset and the asset is going down. Can you believe it? We're losing assets. At least we're making money, right? Right. And then obviously under assets, it's going to be a negative 400. Okay. And then under owner's equity, it's going to be a negative 400 because this is an expense. Then on the fourth, it says purchased stationery on credit, 115 from WW stores. Purchased on credit. So which accounts are affected? Yes. Creditors control, yes, and stationery. That's what we bought. Stationery, 100%. Okay. Right. So what are we debiting? What are we crediting? Debiting stationery, yes. And we are crediting creditors. And my PC is just. And then. How? Creditors. Control. Okie dokie. So our assets, is there anything happening there? No, because we didn't transact with an asset. So what are we going to decrease or increase? So expense, in other words, owner's equity, 115. And then liabilities, positive, because now we owe more, 115. Okay. And if you check your account, it's going to be 0. 5. Receive 50,000 as a loan from ABSA. What are we debiting and what are we crediting? Yes, we're debiting bank because we're receiving money. And then we're crediting what? Is it creditors control? Yes, we can say bank loan or we can say loan. Either one is fine. Then if you want to be really pedantic, you can just put ABSA there. Because maybe we have a loan with FNB as well. All right? Okay, cool. Perfect. Okay, there we go. So under assets, we're obviously going to put a positive 50,000 because there's money sitting in the bank. But also under liabilities, we're also going to put a positive 50,000. Right. Then we go to the 6th. It says bought equipment for 2,000 cash from OCS stores. Equipment for cash. So equipment is an asset. It's increasing, right? So we're going to debit equipment, and then we're going to credit bank. Okay. And that was for, so here you can just do plus minus 2,000 because both of these are assets. Then we have returned damaged goods to JJ Traders. We have returned damaged goods to JJ Traders. All right. How do we treat this transaction? This is the one you had some difficulties with. What must happen? Yes. Yes.
So your assets go off, your trading stock is credited. If it goes down, you take it.
And then what did you say again? Tell me what you said. Bank gets debited. So that was it. That was all you needed to do, 100%. Basically, another way you could have done this, because here, can you see they didn't say whether the goods were initially bought for cash or on credit. So what you needed to do, just to make sure, was you just need to scroll up to say, did I have a transaction with JJ Traders, all right? And if I bought anything from them, okay? And was it on cash or was it on credit? Because that's typically what you'd be reversing, okay? So here we see that it was for cash. So as you guys obviously mentioned, we can then obviously then credit trading inventory, okay? If it was on credit, then what we would have been debiting would actually be creditors control, because then up there, instead of bank, it would have also been creditors control. We would have owed them. Okay, right, but excellent job. So under assets, we're going to have what? Plus minus, plus minus 500. Okay, again. What's going on? Oh, what are you saying? Oh, man. At least you don't have 2 more classes after this. This is it for you guys, right? The envy. Received rent from tenant, 500 Rand. Which accounts are affected? Yes. 100%. We're receiving money, so we're debiting bank, and then we are crediting rent income. Okay? Because that's income, and we are receiving, and it's just been incurred, or we are receiving an income. Plus 500, and then plus 500 over there. Okay, the owner withdrew 100 Rand for his personal use. Drawings, yes, and bank. What are we debiting? What are we crediting? Yes. And we're crediting bank, 100%. And that was for 100 Rand. So here it's going to be a negative 100. And then under owner's equity, negative 100. Of 2,500 to workers. Paid wages, yes. I heard bank. And wages, or salaries and wages, you still would have gotten your mark. So what are we debiting? What are we crediting? 100%. Salaries and wages, we're debiting, and then we are crediting bank. Okay, so under assets, we have a negative 2,500. Then under owner's equity, we have a negative 2,500. So that is an expense. Okay, and then we are done. Okay, we just need to calculate the profit. The profit or loss. So again, we go to owner's equity and we check. Do we have any incomes? Okay, there's a 90,000 there. We're going to include it on the second. Nope, because that's a capital contribution. On the third, we have cash sales, 600 Rand. Are we going to include it? Okay. And we also have what? We also have cost of sales. And how much was the cost of sales? 400. So that's a negative 400. Okay. $15. Are we going to include it? Okay. The other way is you can obviously just read through every transaction all over again. Okay. We know how to work smart and not hard, right? Okay, right. So then the next transaction where we have a positive is on the 8th, and that was for rent received. Are we going to include it? Yeah, we're going to include it. 500. Okay, on the 10th, what happened? We paid wages. Okay, so obviously that 100 Rand, we're ignoring it because it's drawings. Okay, on the 10th, we paid wages of 2,500. So we're obviously going to include that. So, do we have a profit or loss? Really? Wow. Why do I feel like that's wrong? Yep. Okay, we really did make a loss. Shame. Okay, how much was the loss? 1,943. 15. 1.5. Okay, let's put a negative there. Okay, and this is when they say we are in the red. So let's put this in the red. Okay. Any questions? Yes.
Why didn't we add the first transaction?
The 90,000.
No, the 500 deliveries.
Remember deliveries, it was accounted in trading inventory.
Yeah,
Make sense?
yeah.
Okay. Any other questions? Okay, cool. All right, so ladies and gentlemen, that is it for today. I just want to, when next am I seeing you? Let's see exactly when. Okay, let me actually just kill this recording.